Alright, so I'm about to give you a visual demonstration of how to chart and play your levels, right? So here is Apple. Now, these are the levels that I have. Remember, how to play this would be to chart your levels first. You need to make sure all your levels are plotted. This is what you should be doing first thing in the morning, like 8 a.m., 8:30 a.m. Or even you can do it after market closes as well. But yeah, applying your levels and just playing your levels. Like you see how Apple, like I have this 203 level plotted and I have this 205.28 level plotted. So how Apple has just been, the price action has respected these levels today. Bam, you could have taken a reclaim here, or let me see, up in here, one of these two candles, you could have taken a reclaim of this 203 level. If you enter one of these candles, you would have had some drawdown unless you waited until one of these two green candles, and it would have been a nice trade. Or you could have, if you were not looking at this name during the open, you could have caught this midday and took a reject off of the 205.28 area. Or even if you weren't watching it then, you could have possibly taken, I probably wouldn't have taken this so late in the day, but it respected this 203 level. So it's just all about how you learn. This was the thing that took me the longest to learn, that you really have to trade your levels. And it doesn't start to make sense until you start doing that. I know a lot of traders who they were struggling and having problems, and it was all because they were not trading key levels. They would try to take some 9 EMA bounce or any type of EMA bounce or a VWAP bounce or a VWAP reject, or they would think of things to try and trade, but they were not actually trading the key levels, and that's what matters most. Supply and demand, support and resistance, your key levels. Give you one more example. SPY. Okay, hold on. So yeah, this would be red. And it's not gonna be like precise every single time. Don't try to, that was another thing I had a problem with, like trying to make sure that it was perfect. It's not gonna be perfect. It's not gonna go directly to 631.54 on the dot and reject from there. Sometimes I would play it safe. Like I usually play it safe now. So sometimes I might even miss the initial reject or miss the initial bounce. And I'll try to let it go, dig a little bit into the level some before it starts to make a V-shaped recovery. For example, if we were doing a reject, right? So I might wait until it came into this level here, but I might wait until it dug into the level a little deeper to around the 632 area before I started to wait on some type of confirmation on a break and retest to the downside, if that was to happen, right? Or here, you could have waited here, but you see how it kind of, it's the same thing, right? Just the opposite side. So I was talking about puts. In this case, I would be talking about calls, right? So I would wait. So I have this level here, and I would wait until I started to see this V-shaped reversal. And I probably would enter on this candle here, this candle wick here. Or yeah, you could have definitely took a scalp here. You could have waited to the second time it happened. In general, what I'm trying to say is just wait until, sometimes it doesn't always hit this level precisely. Sometimes it digs into the level some before it proceeds to bounce, right? In this case, we had a V-shaped recovery. V-shaped recovery turned into a double bottom. Remember I told you guys about chart patterns, right? And here, right here at this bottom, you could have waited for this candle here, or even got in at one of these candles here. Or you could have got in on the breakout here and wrote it up. Double bottom off of, this was on the 5 minute. I told you guys that the charting with the chart patterns, that they're the strongest, the higher time frames, right? So if you go on the weekly and you see a double bottom, that's something I would take for sure. If you go on the weekly and you see a double top, if you go on the weekly and you see a bull flag or a bear flag, this is actually a breakout. Hold on. This it's like an ascending triangle. And if you go any of these chart patterns, right? So if you go and just Google them, ascending wedge, right? And this is what pops up. So remember what we just saw here, right? This is on the weekly, right? An ascending wedge pattern here, bam. Ascending wedge, pattern. You could go here to how to recognize and trade rising wedge patterns. This is on Investopedia, but the easiest way I found out how to do it is to just do it on the chart. You have to learn how to spot these things anyway, so why not just go straight to learning how to spot these things on the chart. So yes, be looking for and this does make sense too, right? Because SPY is definitely overextended, right? So the fact that we have on the weekly time frame a rising wedge pattern, but you can go back here, rising wedge uptrend, be looking for a break in either direction, but the rising wedge is usually bearish. Be looking for SPY to fall, or the S&P 500 to see some type of if it breaks out. So you want to see what happens is after you create the pattern, you want to see price action do this here, 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 here. You want to see it start to fall, to fail this outside of this wedge. You want to see a retest of the wedge, and then you want to see more continuation to the downside. That's what you want to see. That's how to play chart patterns. So I'm gonna start trying to give you guys more visuals of things to look for. Just start looking for chart patterns, right? Just start looking for all types of chart patterns. Any type of chart pattern you can think of. Ascending wedge, you got your bull flag. You can do bull and bear flags on any time frame, but the same applies to those chart patterns as well. They're strongest on higher time frames. So you can do a bull flag, you can mark a bull flag or a bear flag on a 5-minute time frame. It may or may not go, right? It's not the highest probability because you're on one of the smallest time frames. It's a good chance it might go. There is really not no percentage wise that I've found personally of how many, 70% of the time it will happen on a 5-minute time frame, or 80% of the time it won't happen. I haven't found a percentage, but I just know that these things do work from my personal experience on higher time frames. That's how to do that. Bull flags, what else? Bear pennant, bear flags. Just be looking for those. Go to all, I would advise you to just hop on TradingView, right? And just look for them. Go to every ticker, right? Look for them. Look for a bunch of chart patterns. Anything forming here, pretty steep angle, but it is in a nice uptrend. TSM, I don't really trade TSM. Look like it started to be a double bottom, but and don't just do the weekly, do the daily as well, 4 hour. You see what happened here? This bull flag here ended up playing out, right? So you want to wait until the top of the bull flag breaks. You want to wait on the retest if you can. I don't really want you to get in early. You can get in early, but I would prefer that you wait on a break and retest. It's just the highest probability setup. You see what happened after that? After the bull flag, it played out and it continued, right? So you want to enter some type of, you don't want to enter weeklies on these. You want to give yourself a little time for this to actually happen. Sometimes it'll go higher than this, right? Sometimes it won't. But yes, that is chart patterns. I hope y'all enjoyed. I hope this helped, and let me know if it did. I am going to start doing more videos for you guys. I gotta go. Y'all take care and have a good day.